everyone, welcome back to another video in our series all about Prodigy Finance, where I'm uncovering all the details you need to decide whether you should take a loan from Prodigy Finance to study abroad. When it comes to financing your education abroad, choosing the right loan can make a significant difference. So in today's video, we'll compare Prodigy Finance with all other popular Indian bank categories such as public sector banks like State Bank of India, also known as SBI, private banks like ICICI and Axis Bank, NBFCs like Hdfc, credilla, Avance and Auxilio. We'll make the comparison based on interest rates, repayment terms, loan amount, collateral requirements and some more points. So let's break it down step by step. So the first criteria is best known for, and in this we will discuss about what kind of loan the bank typically provides. And as you can see, public sector banks typically provide a secured loan, whereas private banks can provide you unsecured and secured loans, with NBFCs also providing you unsecured loans, and international lenders can provide you unsecured loans without a co-applicant. So what do you mean by unsecured or secured loans? In secured loans, the borrower provides collateral, which might be property or other significant assets, to secure the loan. This can lead to better interest rates and higher loan amounts. Whereas in an unsecured loan, the borrower does not provide any collateral. These loans are often easier to obtain if the borrower or their cosigner has good credit, but they generally come with higher interest rates and may have strict borrowing limits. Some of the popular choices under PSBs are State Bank of India, Union Bank of India and Bank of Baroda. Whereas under private banks, it is Axis, ICICI or Hdfc. In NBFCs, the top favorites are Hdfc, Credilla, Avance, Incred and Auxilio. Whereas for international lenders, it's Empower and Prodigy. Now let's talk about the interest rates. For PSBs, the interest starts at 9.4%, whereas for private banks, it starts at 9.85%. With NBFCs, it starts at 11.5%, and with international lenders, it starts at 12%. So if you compare the interest for a PSB and an international lender, it can vary from 3 to 4%, which is a lot of difference that you should need to consider before taking your loan. So the next criteria is the maximum loan amount that you can avail. For PSBs, you can borrow up to 1.5 CR, and for private banks, you can borrow up to 50 lakhs. For NBFCs, it's around 75 lakhs, and for international lenders, it's 100,000 US dollars, which comes roughly around 80 lakhs. Next up is margin money, which is the portion of the total education cost like tuition fees, living expense that the borrower must pay out of their own pocket. The rest is financed by the lender. For example, if the margin money requirement is 10% and the total cost of education is 10 lakhs, then the borrower needs to pay 1 lakh themselves and the lender will provide the rest of the remaining 9 lakhs. So as you can see from the chart, it is mostly asked from public sector banks, which is around 10 to 15%. And in rare scenarios, private banks can also ask you, which comes roughly from 0 to 10%. And in case of NBFC and international lenders, they do not ask you for margin money, but in some cases, Prodigy can also ask you to bear your own living expense cost and they'll only provide the tuition fees. Now let's talk about another important factor that you need to consider before taking your loan is the repayment tenure. For PSBs, you can avail the repayment period of up to 15 years. Same is for the private banks as well. You can repay your loan within 15 years. Whereas for NBFCs, you can avail a repayment tenure of up to 20 years. Also for international lenders, you can take the repayment tenure of 20 years. Now let's talk about your repayment options during your moratorium period. For public sector banks, it is free or you just have to pay the simple interest. For private banks, it is partial simple interest, or it can be EMI as well. For NBFCs, it is simple interest or your whole EMI. And for international lenders, it's also simple interest. So the next criteria is the processing time. And in this chart, it is only the ideal time it would take if you have all the documents that are needed, which is rarely possible. So for PSBs, the processing time may vary a lot. Here it is 10 to 15 days, but it can go up to a month or two as well, because there is a lot of documentation that is required when you take a loan from public banks. For private banks as well, here it is 5 to 7 days, but you can expect anything from 2 weeks to 4 weeks of time if you want to get a loan from private bank. For NBFCs, it can be a bit faster than public and private banks. So it can roughly take from 7 to 21 days for NBFCs as well, because they also need proper documentation, which might take some time. For international lenders, the processing time is really fast because all of the process is online and you do not have to have that amount of documentation that is required by public and private banks. So it makes it a bit faster, but still you have to take like couple of weeks because it can take 7 to 14 days to get everything sorted. So out of all these options, international lenders will be the fastest in their processing time. So now comes the point where most of us get stuck, whether the banks require a collateral or a co-applicant or both. So public sector banks usually require collateral or a co-applicant, and in some cases they might require collateral and a co-applicant as well. So most of the private banks do not require a collateral if you have a financial co-applicant to back you up. Same is the case with NBFCs. They don't require a collateral, but they would need a financial co-applicant as well. So here is the point where most of the students get stuck, is when you do not have a collateral or a financial co-applicant to provide, then you don't have any options other than the international lenders like Empower or Prodigy, because they do not require any collateral or co-applicant. Also, another point to be considered is the tax benefit that you can avail. If you take an educational loan and start repaying it, you can reduce your taxable income by the amount of the interest paid during that year, thereby reducing your overall tax liability. For example, if you pay 1 lakh in interest on your educational loan in a financial year, you can claim this amount as a deduction under Section 80E when filing your income tax return. PSBs and private banks both typically offer this tax benefit on educational loans, whereas in NBFCs, only Hdfc Credilla offers this tax benefit. And international lenders like Empower and Prodigy do not offer this tax benefit as they do not fall under the recognized financial institutions in India for this purpose. To sum up, both Prodigy Finance and Indian banks offer solid options for financing your education abroad. Prodigy Finance is ideal if you prefer no collateral or co-applicant and a simpler application process. On the other hand, Indian banks can offer competitive rates and higher loan amounts, especially if you can provide a collateral. Always remember to carefully read the terms and conditions of each loan, calculate your total repayment amount, and consider your financial situation post-graduation. If you have any questions or doubt, you can drop a comment below or message me directly on Instagram and I'll make sure to get back to you. And if you found the video useful, then give it a thumbs up and also subscribe to the channel to get more such videos. And I'll see you in the next video.